Let's put the spotlight then on Raymond to talk a little bit about expansion plans in terms of what the outlook is on their margins with cooling of input costs. And Amit Agarwal, who's the group CFO of the company, joins us right now. Thanks so much for taking time out. Now, in your recent interactions with analysts, you've spoken about strong wedding demand. Can you just highlight what the trends are in terms of footfall, transaction value this time around, and how different it is from last year and the last couple of years?
No, absolutely. Thank you for having me. Actually, if you look at it, the wedding is very, very strong this time. In between November to December, we are talking about almost 32 lakh weddings. And actually, you won't have a wedding where the Raymond would not be able to sell a fabric for suits or an apparel or our ethnics, which we have recently launched. I think that is really in a big way going. And if I look at it in terms of the overall demand, it is not just restricted to the wedding. First, we saw the strong thing happening because of the festival season. And in the last 2 years, people have not been able to celebrate much, which is why they are coming back now to celebration. And the NRI weddings, which was also not there for the last 2 years, that has also come back very, very strongly. And going forward, if I look at the January-March quarter, once again, we have seen almost 44 days of wedding. So that also gives us a strong feeling that the markets will be good and robust. As far as the average ticket value, I can tell you that we are no more on a recovery mode, we are on a growth mode. And if I look at it, the ticket value pre-COVID to now, it is almost moved up by 26 to 27%. And the reason primarily is because of the K-curve recovery, which we are seeing. And in a K-curve, the people who are buying, let's say, a 1,500 rupee meter fabric, now he's end up buying a 2,000 rupee meter. So that's the kind of change. People are moving up the value chain. They want to get a better quality fabric, better quality of ethnic products. And that is why we are seeing a strong sales which we had delivered in the second quarter.
Fair point. Wedding season is great. Indians are buying more. Unorganized market is losing its sheen, and a company like Raymond's is gaining. That's a big picture scenario. But some would argue that this big picture scenario was there 5 years ago, and this big picture scenario will be there next 5 years. What we want to understand is that what is so unique about this wedding season? What are the trends which you've seen, which perhaps you've not seen in your entire 5-year journey or 7-year journey?
Yeah, no, absolutely. The two things which is happening is previously the ticket per wedding, let's say, was in the range of 3.5 lakh, which has moved up substantially higher. Now it is in the hovering, if you take a ballpark average, somewhere in the range of 7-8 lakhs. So therefore, what happens is if your allocation towards wedding budget has gone up, people tend to go and buy more and more fabrics, apparel on the dresses, and that is very clearly a benefit to us. Second things, if I look at it in terms of our ranges, we have brought very specific ranges for our customers for a wedding range, even on a shirting side, like say the Utsav or the Monarch, which is very, very much catering to the demand for the wedding. So that is why we are seeing much different this time compared to the last few years.
Yarn prices are a function of cotton prices. Cotton prices have come down, and festival season is in full gear. So both in terms of demand and raw material prices coming down, are you in a very sweet spot?
Okay, actually, you see, that has been reflected from our results in the last 4 quarters. We have been delivering record revenues and record profitability. And if you look at the cotton price, we buy cotton yarn, the raw cotton had moved up significantly from a 32,000 rupees to, let's say, 95,000 to 96,000 rupees per candy, which has come off. Now it is hovering in the range of 65, 67,000. So it has not gone back to the pre-COVID levels, still continues to be high. But over the period, slowly we have been able to increase the prices of our products, especially the shirting material, and that has enabled us to get into a robust margin zone. And that is why the performance every quarter after quarter, we are showing a strong performance, both operating as well as financial performance.
Amit, the other intriguing thing about
your business is that you are seeing a lot of other players as well enter into this space, right? And we've seen that off late. What I wanted to understand was whether you all are going to eat into each other's market share, or do you think there is plenty of room for all, for everyone to survive and thrive?
So first of all, we appreciate if the competition comes in because that helps us to grow the market. So the market will grow and we will all participate. But I think two or three things which are very unique with Raymond is the distribution strength. I think the kind of distribution strength over last so many years we have created is representation in 600 cities and with the dealer network who have been associated with us for 40, 50 years. And I think that plus the brand itself, because Raymond signifies trust. So with that, people just come and shop for our Raymond products. And that's a big advantage and a differentiator for us compared to many.
That's quite interesting. You know, the other thing, and I don't know whether it's right to really talk about that with you or not, that your real estate arm is turning out to be a, completely new and powerful growth engine. Tell us a little bit about it if you can.
Sure, no, absolutely. I think we are very proud that we have been able to build this real estate business over the last 3.5 years. And you see the performance is very robust. There we are achieving in the first project, the 1 BHK, 2 BHK, we have sold as we speak today almost 65-66% of the total inventory. The still project has another life cycle of 4 years to go. And if I look at it on this project, we are going to deliver a significant number of apartments 2 years ahead of RERA, which is also very different compared to the other builders. So that's making a big differential and helps us in improving the cash flows for the business. Now, let me talk about the second project, the Address by GS, the 3 and a 4 BHK, which we launched last year, November. Now, as we speak today, any project of this size is almost like a 5.5 year, but we have sold once again 67% of that project in 1 year. And there also the construction pace is very, very fast. So I think we have come in a real estate business with a little bit of a manufacturing mindset where you need to give the best quality of the product, which we do in our fabrics, apparels, as well as at a right price. It's a very emotional decision. People who are living in a rented apartment or such thing, they want to move their own apartment. I think that makes us very, very strong into the real estate. And if I look in the Thane micro market, we have sold, if I take the top 10 builders, we have sold between these two projects, the total number of inventory flats in the July-September quarter higher than all the balance remaining.
Okay, so that's a quick word that's coming as far as real estate goes, which is, contributing what, about 11% of your revenues. Looking forward, and this has been discussed, we would love to get your views straight up from the company. How should analysts, how should retail shareholders look at Raymond? A pure play textiles company with real estate interests, or is it going to become a real estate company with textile interests?
Actually, we have all these businesses which are going on a growth path. So obviously the lifestyle business will remain a very strong, very large part of our substantial part of the business. The real estate will come, let's say, anything in the next 4-5 years to the tune of 20 to 25%, 30% of the revenues. Balance would come driven primarily by the lifestyle and some bit 15% from the engineering business.
The other thing I wanted to ask you, sir, and Mr. Singhania actually said this after you declared the September results. It was part of the press kit as well, I remember very clearly, where he made a case saying what they saw in the September quarter was shoppers are preferring to go to stores as opposed to buying online. I'm, of course, talking again about the lifestyle business. So in that context now, revenge shopping, as we were calling it post-COVID, is that still the trend? Is that how it's going to continue as far as Raymond goes? And therefore, will Raymond not do what a lot of other lifestyle companies are also doing? maybe build a super app. That seems to be the big trend at the moment. Every consumer-facing company wants to have an app. It's not focusing as much as on omni-channel. Like, how are you figuring this out? If your
No,
customers are preferring on offline stores.
look, I think we are very fortunate to have almost 10 million in our CRM customers, and we strongly believe in the brick and mortar because shopping is an experience. People come here to shop, and if you talk especially on for weddings and such things, people just don't want to come alone. They come with the family, and along with the family, they trim the clothes and see how it looks on them, and that is where the purchases happen. So sometimes people spend almost 1.5 to 2 hours at the store. So they want to be very comfortable, and that is one of the very important reasons that people will continue to come to the store. In our apparel business, we have launched the omni-channel presence. Absolutely all our 350 stores of the EBOs are connected with an omni-channel. So we will participate into the digital, but we strongly believe in the day-to-day brick and mortar store. And if you look at our ethnics, we are expanding our ethnic stores. So far, we have opened almost 40 stores, and in the remaining period, let's say till March, we expand another 35 to 40 stores to be opened. So we are very clear on a journey of opening of stores because that's the way we feel the customers will continue to do the shopping.
Amit, great to have you on the show. Good chatting with you as always, and we'll chat again hopefully soon.
Thank you.